This is the Friday, December 8th, 2017 version of the Market Plus segment. Joining us now is John Roach. John, welcome back.
Thanks, Mike. Great to be here.
You know, I want to start off with a conversation you and I have had a couple of times, and you brought it up on the program a little bit, and it's the idea of perception and how that affects the markets as a whole. We've got the stock market climbing up past $24,000. John, are we getting near a top in these markets, or what do you think? Are we still waiting on something more to come?
We may be. I'm not smart enough to know when we're going to peak the stock market here, but I do think that the key to understanding markets sometimes is to understand we don't trade fundamentals. People trade what they think the fundamentals are. So it's the people and the attitude and what they believe about the situation that's more important than what the real situation is. And right now we have a lot of people who really don't believe the U.S. economy is cranking the way it is. We have a lot of people that are believing that we're in trouble and things are bad and so forth, when in reality the fundamentals are really quite positive. And so what could well happen here is that we could realize, people could realize that they've been thinking the wrong way, that things are actually improving, wages are going up, employment is becoming more full, and with that realization, we could run, I think, a round of inflation through our whole economy. I think that's the next step, is that we start to inflate in this economy. And
inflation should be beneficial, broadly speaking, for commodities.
Should be. Commodities, if you look at the commodity index graph and lay it on the same chart with the equity graph, equity indexes, and you realize that, I mean, the money is all over there. There's none over on the commodity side. And so we could certainly change that attitude if we get people realizing and believing that the U.S. economy is on solid footing.
And that explains your purchase, as you mentioned during the show, of 410 corn in December 2020.
I think it's better than buying farm ground.
Yep. All right. Well, now we're back to commodities. We've got a question here from Tim in Crookston, Minnesota, at $6 wheat guy. Tim says there's been a lot of concern in the markets over the past month about South American weather. Does it seem like this concern is started earlier than in other years?
Not really. We had the early worries it wouldn't rain in Brazil. And they couldn't plant because they were waiting for some rainfall to come. We had too much rain in Argentina that then switched over, and now it's too dry, with dry weather in the forecast. And so that's a very normal thing. When we look at the months that we want to make sales in, there's the South American weather situation, and in December and January is when we see the most peaks that come out of South America issues. And then, of course, it's the spring into summer of this country when we have the concerns about this country. So the weather's not unusual at this point.
So at this point, is it getting dry enough that we can continue or turn this soybean rally around and keep it moving higher?
The forecast actually is for some pretty good rain. So
okay.
We were there a week ago, but today we have pretty good rains in the forecast. Now, they have to materialize, but they're definitely in the forecast better than what they were certainly a week ago.
All right. And now to kind of come back to what we talked about at the start of this section, Agrivisor in Bloomington, Illinois on Twitter at Agrivisor notes that commodities are getting cheap relative to equities. What's your take on the chance of investment money flowing from stocks to commodities, to the grains in particular? And let's think about it over this next year. Do you think this reversal could happen sooner rather than later?
I don't know, maybe.
Okay.
But right now, what's more exciting is where's the action at? And when you look over to Bitcoin, that's trading as robustly as it is, it's awful hard to think that people are going to go buy corn that moved a whole 3 cents. I mean, it's hard to get money to come into a market when there doesn't appear to be very much opportunity in either direction.
Now, I got to ask you a question. This is a question from Corey in Polk City, Iowa. He's on Twitter at corn_pork and beans. He wants to know, John, are you in or out of Bitcoin?
I'm out. I have to, it's a sad story too, because I had a very good friend, a very knowledgeable person who counseled me quite aggressively to get in when it was 600. And so and I felt good because it was not long after that bank collapsed, and I thought, oh, I maybe dodged a bullet, but no, I missed a rocket ship.
Yeah, just to put it into perspective, folks, Bitcoin hit $16,000 on Friday for a Bitcoin, for a single unit. Crazy market. Now, bringing it back to commodities, actually, and talking Bitcoin, Phil up in Ontario, Canada at Agrodome is wondering, can Bitcoin, as we look out past the craziness in the market that's there today, do you think this Bitcoin, these digital currencies, are going to be a part of international grains transactions with Russia for wheat or as an exchange for payments to third world countries?
Certainly possible, but you're going to have to get more stability. Remember that an international grain firm hedges off almost all the risks so that they really narrow their risk down to very small numbers, very small percentage of the total value. Bitcoin right now has an unbelievable amount of risk in it, and so that would not be the first place that they would tend to go, but 5 years from now or 2 years from now, it may be a whole different situation. It may be that that's a solid store of value, and it moves in relatively predictable ways, in relatively small ways, in which case people can utilize it. But when you're moving 10%, 20% at a whack, that's not going to help anybody in their trading transactions.
Right. Phil also has a question. Looking out to 2018, looking at planting intentions and we're at like almost 2.6 is the corn to bean ratio. As you look out there, Phil wants to know, is 2018 finally the year U.S. soybean acres overtake corn acres?
Most people tell me there's more profit in the beans right now than there is in corn. I was just at the South Dakota Soybean Association, and I saw their yield records, their reports, and I mean, it's amazing. They were amazed to see that the top number was I think 98 bushels per acre.
Jeez.
And so when you're, and a lot of them in the high 60s, a few in the high 60s, a lot in the mid 70s, and then on up. And so those kind of numbers are definitely going to attract beans in, and we saw record yields in some of the southeastern states on soybeans. And so, yeah, it could well be that this is the year that the beans surpass corn.
Yeah,
acreage-wise.
I mean, just looking at the numbers, I mean, you're at $600 or $700 an acre gross revenue growing beans at $10 a bushel versus $800 growing corn at 200 bushel an acre, and boy, that's a lot less inputs going into grow beans.
That's certainly the case. However, there's more management involved. It's a part of a rotation program. I mean, so you really kind of have to get yourself set up to be able to do all that. But people have been doing that, and I think that the beans will compete very aggressively with corn. The current idea is that the corn and bean acres will be about the same this next year. That's
probably
the current idea.
90-90 kind of, is that what you're figuring?
Exactly. Yep.
Okay. Now, John, we did talk feeder cattle a little bit on the program, and you mentioned that this might be the time now to start filling pens or start making purchases. How far out should folks go if we're looking at filling my pens? I got a pen leaving in March. Should I be buying futures today to cover that? Do you think we're down low enough to justify that?
Maybe you start lightly.
Okay.
Start lightly and accumulate on weakness. You know, just like you would out in the sale barn, really. I mean, you would pick your days and pick your times and pick up a little bit of inventory, and I think that when you put them in the lot in March and then look at what the opportunity is out forward, I think it'll work.
All right, John. Before we let you go, got to ask you about crude oil. We were trading 35 to 45. Now we're up pushing $60. As we head into the winter months, is crude oil a market to get long, or do you sit this out?
I don't know. We're trading at $57 or thereabouts today, as I recall,
yep.
and so we're up toward the upper side. But the oil companies have figured out how to kind of dial their numbers, production numbers, a little bit. And so if the price starts slipping off, they just slow down just a little bit. It's been pretty interesting. So they brought the market up from the lower levels. And then you look around the world, and you've got economic conditions strong, and so it would seem to me that the upward pressure is the right attitude with crude oil.
All right. John Roach, thanks you so much for taking the time to join us. We do always appreciate your thoughts on the markets.
Thank you very much, Mike. Great being here.
Folks, the holidays are just 2 weeks away, so now is the time to write Santa your wish list, and ours includes you in our Market-to-Market Classroom project. We're looking for current students to submit their big picture commodity questions and have them answered here in Market Plus. So join in our reindeer games and send us your questions in video form. To learn how to do that, you can direct message us on Twitter or send an email to market2market@iptv.org. Join us again next week when we'll explore how hunters are filling empty plates in the heartland and Naomi Bloom will sit across from me at the market-to-market table. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.